Hello, learners. Welcome to SANG, which stands for Studying Addict Network Group. My name is Mr. Adesanmi. Welcome to economics class today. And as we've seen in this other series we've watched, we'll be looking at public finance. And under public finance, we're looking at taxation. The last series that I posted was on indirect tax. Indirect tax, where we looked at the differences between direct tax and indirect tax, and we looked at other forms of indirect tax, starting from import duties down to export duties, down to excise duties, down to value added tax and sales tax. We also looked at purchase tax. Then we looked at system of indirect tax, talking about the ad valorem tax and the specific tax. So today we'll be looking at another subtopic under taxation, which is forms of tax. Forms of tax. Now, under the forms of tax, we have about three forms of tax, which will be looking. There are about three forms of tax. We have the progressive tax system, the proportional tax system, and the regressive tax system. The progressive tax system, the proportional tax system, and the regressive tax system. So these are the forms of tax we'll be looking at today. So we'll be starting with the first one, which is progressive tax system. As it implies, progressive, meaning there's a positive relationship between the tax you pay and your income. A positive relationship between the tax you pay and your income. So what is progressive tax? Now, from the diagram you see there, a progressive tax rate increases as your income increases. A progressive tax rate increases as your income increases. So, for example, the poor individual or the people with that are low income earners pay less compared to the people that are high income earners, meaning the poor people pay less and the rich people pay more. So it is a form of tax in which the rate or proportion of income paid in tax varies directly with the level of income. So that means that there's a direct proportion in between the income and tax paid, meaning if tax is increasing, if income is increasing, tax paid is also increasing. That is the higher tax rate. So a good example of your progressive tax is your personal income tax. Your personal income tax. So the more you earn, the more you pay. So it is what we call payee. Payee. The more you earn, the more you pay. So as you've seen, progressive tax is a form of tax that encourages a form of equality, or trying to reduce the gap between the rich and the poor. So the government of a country bring this money together to provide social amenities for the citizens of the country. So now let's look at some of the advantages and disadvantages of this progressive tax. So number one, under advantages, is that it promotes income equality. Income equality. Just I've said before, that's one of the properties of your progressive tax. It tries as much as possible to distribute the tax burden so that the poor people will pay less and the rich people will pay more. As we all know that in developing nations of the world, the gap between the rich and the poor is very wide. So the function of this tax is to make sure that the gap between the rich and the poor is reduced by collecting less tax from the poor and collecting more tax from the rich. So that will go a long way in redistributing income or cause income equality. Number two is social justice. So when we talk about social justice, is like a safety net for the less fortunate people in the society. So a form of social justice is when you allow the poor to pay uh, less and the rich to pay more. So it's a form of social justice. So another advantages is this. It's a very good source of revenue for the government. Government receive a lot of revenue from the progressive tax because they get the money directly. The burden of the tax can be transferred. So that individual will be the one to pay the money. So now, apart from that, during recession, uh, it enables money to be more in the hands of the poor. So it increases their purchasing power to be able to cope during recession period. But whatever has advantages will also have disadvantages. And one of such disadvantages is this: it prevents taking high pay jobs. As an individual, you know that the more you collect as income or as salary, the more tax you pay. That can go a long way in discouraging you to get that job. So it discourages taking high pay job because of the huge tax to be paid. And sometimes it encourages migration. It encourages migration. So under migration, we have immigration and immigration. So yeah, we are talking about immigration. So you see that high skilled labor will be leaving, going to another country or another state as the case may be. Because if the tax is too high, it shows that they are a disadvantage. So it will encourage them moving from that country to another country. So it's a form of discrimination. It is a form of discrimination. In what sense? It is against high earners because it forced them to pay more. It is against high earners because it forced them to pay more. And now, this is how the diagram look like. This is how the diagram look like. You can see that this diagram is always the same with your supply curve. So we have two axes there. We have the y-axis and the x-axis. Your y-axis we have tax rate, while the x-axis we have your income. Now you see that as your income is increasing from 10,000 to 20,000 to 30,000, your tax rate is also increasing from 5 to 10 to 15. So it's progressive in nature, meaning as you earn more money, you pay more tax. As you earn more money, you pay more tax. So that will take us to the second one, which is regressive. That's the opposite of progressive. The regressive tax is the opposite of progressive. Now, your regressive tax is a tax that reduces as your income increase. So, indirectly, the poor will be paying high tax while the rich will be paying less. So, as you will see in this diagram that is there, the poor are paying 35%, while the rich are paying just 10%. So it's regressive in nature. Now, from the note, you can see it said it's a form of tax that takes a lower proportion of income as income rises. So it's a tax system that as your income rises, you pay less as tax. So there is an inverse relationship between your tax rate and your income, a negative relationship. And a good example of such tax is your excise tax, your sales tax, your gasoline tax, in which each person pays at the same rate, irrespective of their income. The rich pay the same thing with the poor. So indirectly, we can call that a flat rate. But take note, your indirect tax is a tax that as you earn more income, you pay less tax. You pay less tax. So let's look at some of the advantages, disadvantages of this. Of course, part of the advantages is that more government get more revenue from this. Yes, more revenue from this. Yes, And of course, it helps um, government to meet up with their various expenses. So, but in here, I want to comment on the disadvantages. Number one is that it reduces freedom of choice. So, when a regression tax is based on consumption, such as your sales tax, it reduces the ability of that individual to make choice, because you know that anything you buy, you pay tax on it, and that tax can show in form of high price. So it really affects the low income earners. Now, in a country where the level of poverty is high, meaning the gap between the rich and the poor is very, very high, you see that the poor will be affected by this because of their level of income. So, two is that it discourages consumption of some items. Yes, government use the regressive tax system to um, prevent people from consuming harmful product, of course. So this tax used to discourage the consumption of some items. Now, some items that government can tag as harmful to you might not to you might not be harmful. You might need it for survival. So, and that will discourage consumption of such items. Now, what happens to those industries that are producing those commodities? Once you are discouraged in consuming that product because of high price, it definitely will affect their demand, the demand. And once demand is low, supply will be low. And once supply is low in those industries, then they have to lay off some workers to be able to survive, and that will lead to massive unemployment in that industry. So number three, harming the poor. Yes, this tax system harm the poor more than the rich, because the poor pay more than the rich. So as this tax system is unfair because it places more burden on the poor and the low income earners. Now, number four is that it decreases government revenue. It decreases government revenue because of the fall in consumption of some of the commodities that have this regressive tax nature. A good example is your sales tax and then your excise duty tax. So indirectly, government revenue will be reduced because consumption will be reduced, and those industries will not be able to make up with their tax obligation, which indirectly will reduce government revenue. So, as you can see in this diagram, your regressive tax system is just like your demand curve, which has a negative relationship between the tax rate and the income. So as your income increases, if you can see that, as your income increase from 1,000 to 2,000 to 3,000, your tax rate is reducing. So someone earning 1,000 naira is paying a tax rate of 10%, and someone earning 2,000 naira is just paying a tax rate of 7%. While someone earning a higher income of 3,000 is just paying a tax rate of as low as 5%. That's one of the advantages of your regressive tax system. So the next we'll be looking at is proportional tax. Proportional tax. So as the name implies, it is a form of flat tax. A form of flat tax. So as you can see, everybody pays exactly the same amount irrespective of their income. So it's always in percentage. So everybody pays 15% of their income. So it's a flat rate tax. So it's a form of tax in which everyone pays the same percentage of tax rate, irrespective of their level of income. So a good example is your sales tax and your value added tax. In Nigeria presently, the value added tax is 7.5%. So irrespective of your income, it still remain the same. So it's a flat rate tax. A flat rate tax. Now let's quickly look at the advantages and the disadvantages. Number one, because it's a flat rate tax, people will want to pay. Yes, so it reduces what we call tax avoidance and evasion. Now, some people believe it is a fair tax because it's in percentage. So if you are earning 10,000 naira, you just pay 10%. If you're earning 30,000 naira, you just pay 10%. So globally, it leads to healthy competition, which bring about growth. Now, it also reduces what we call disincentive, yes, in a country. There are compliances, cost of compliances to get the taxes reduced because people will be willing to pay. And that will go a long way in creating wealth, But some of the disadvantages this, some of the disadvantages this, that the poor indirectly are at the receiving end as well. Because it's in percentage, the poor pay more than the rich. The poor pay more than the rich. The poor pay more than the rich. Apart from that, this tax system are simple because it is flat in nature. So it is a tax that is very simple to calculate, and it's not that flexible. It is not that flexible, and it can create unhealthy physical competition, meaning in terms of tax. Uh, Countries or states can lower their own, and that will encourage mass migration of capital and uh, work staff to those states. So sometimes it can create unhealthy rivalry or unhealthy competition. So as you can see, it is flat in nature. It is flat in nature. So as your income increases, your tax rate remains the same. As your income increases, your tax rate remains the same. So if your income is, if you're earning 10,000, 20,000, 30,000, down to 100,000, you still pay just 10% of your income. So this is a good example that illustrates the differences between your tax forms. So I have the names of our three people there. We have James, George, and Daniel. Now look at their income from 5,000 to 10,000 to 12,000. So for progressive, as their income increase, the tax rate increase. So from 2% to 3% to 5%. But if it's regressive, it's the other way around. So the person with the highest income pay a lower percentage. So we've done the calculation there already, which you can see. Y proportion is just 5%. It's just 5%. So this diagram altogether shows the diagram I've showed individually. So this putting the diagram all together. So take note that these forms of tax are what government use to raise money. So we've come to the end of forms of tax, and I believe you've learned one or two things. So as time goes on, we'll be introducing more subtopics under your public finance. Probably we'll be looking at fiscal policy, and how it affects a country. Thank you very much, and have a good